Stop scrolling. This is important. If you or someone you love depends on Social Security, you need to hear this. Starting May 1st, four major changes are rolling out that could directly impact how much money you receive every month. And here's the scary part. Most people have no idea. One day they'll check their account and something will feel off. Don't let that happen to you. Stay with me. I'll break everything down in the simplest way possible so you know exactly what's changing and what to do next. Social Security has been around since 1935. For almost 100 years, it's been the financial backbone of retirement in America. Tens of millions of people, retirees, disabled workers, widows, survivors, rely on it every single month, not as extra income, but as their primary source of survival. We're talking about groceries, rent, medication, utilities. For a lot of families, Social Security isn't a bonus. It's the only thing standing between them and real hardship. So when something changes inside the system, even something that sounds small on the surface, it ripples out and touches real lives in real ways. Now, Social Security has always had changes over the years. Cost of living adjustments, rule updates, policy shifts. That's normal. But what's happening right now in 2026 is different because these four changes coming on May 1st are arriving all at the same time. And when you layer them on top of each other, the impact on certain households could be significant. Some people will actually see more money, others could see less, and some people could lose benefits entirely if they don't take action before the deadline. So let's take it one step at a time. The first change, and this one is probably the most widely felt, has to do with the earnings limit for people who are collecting Social Security before their full retirement age. Here's what a lot of people don't realize. If you're under your full retirement age and you're still working while collecting Social Security, the government actually caps how much you're allowed to earn before they start taking some of your benefits back. This is called the earnings test. And starting May 1st, the SSA is adjusting how aggressively they enforce this, particularly for people who went over the limit in 2025 and are now having those overpayments recovered in 2026. Let me give you a real example so this clicks. Imagine a woman named Patricia. She's 63 years old. She started collecting Social Security early because she needed the income, but she's still working part-time at a pharmacy. In 2025, she earned a little more than expected. Maybe she picked up extra shifts during the holidays. Now in 2026, the SSA is saying she was overpaid. And starting May 1st, they are going to begin withholding a portion of her monthly check until that overpayment is recovered. Patricia didn't do anything dishonest. She didn't cheat the system. She just earned more than the threshold without realizing the consequences. And now her monthly income is going down just when everything else is getting more expensive. This is happening to more people than you'd think. And the reason May 1st matters is because that's when the SSA's updated overpayment recovery process kicks in under the new 2026 guidelines, which allow them to withhold up to 50% of your monthly benefit, up from the previous 10% cap that was in place briefly, to recover what they say you owe. I'll say that again because it's really important. They can now take up to half your check until the debt is cleared. If you've received any notice from Social Security about an overpayment, please don't ignore it. Call them. Set up a payment plan. You can appeal if you believe the amount is wrong. But ignoring it is the worst thing you can do because May 1st is when the clock really starts ticking. Now let's talk about the second change, and this one is directly connected to a major piece of legislation that finally went into effect in early 2026, the Social Security Fairness Act. If you've been following this for a while, you know this has been a long time coming. The Fairness Act eliminated two provisions that had been reducing or completely eliminating Social Security benefits for certain public workers, teachers, firefighters, police officers, government employees. These provisions were called the Windfall Elimination Provision and the Government Pension Offset, and they had been penalizing public servants for decades. Well, they're gone now. And here's where May 1st comes in. The SSA has been processing retroactive payments and benefit increases for eligible individuals since the law passed, but the system has been backed up. May 1st represents a key processing milestone where a large wave of these corrected payments and back pay amounts are expected to go out. So if you or someone you know worked in public service and was previously told your Social Security was reduced or denied because of those old rules, this could mean real money coming your way. Some people are looking at hundreds of dollars more per month going forward, plus a lump sum of back pay for the months when they were shortchanged. Stay with me on this one because you'll want to verify your status if this applies to you. The third change is something that affects a very specific but very vulnerable group of people, those receiving SSI, which stands for Supplemental Security Income. SSI is different from regular Social Security retirement benefits. It's a needs-based program for people who are elderly, blind, or disabled and have very limited income and resources. And the asset limits for SSI have been frozen since 1989. Let me say that again, 1989. The limit has been $2,000 for an individual for over 30 years, which is absolutely absurd when you think about what $2,000 means in today's economy. Well, there's been a change. Starting in 2026 and rolling out in phases, the SSA is updating how certain assets are counted for SSI eligibility, and May 1st is when the first phase of that recalculation goes live. What this means practically is that some people who were right at the edge of the asset limit may now find that money they had set aside, money they were told might disqualify them, is being treated differently. Some people who were previously cut off from SSI may actually become eligible again, and some current recipients may find their benefit amount changes based on the new calculation method. This is one of those changes where knowing the details really matters. The rules around what counts as an asset for SSI purposes are complicated. Things like your home, your car, certain retirement accounts, and how they're calculated is shifting. If you or a family member is on SSI, I would strongly encourage you to call the Social Security Administration or visit your local SSA office before May 1st to understand exactly how this affects your specific situation. Don't assume your benefit stays the same. Verify it. Now, the fourth change, and honestly, this might be the one that affects the most people emotionally, is about Medicare premium adjustments and how they interact with your Social Security check. A lot of people don't realize this, but most people don't receive their full Social Security benefit. Medicare Part B premiums are automatically deducted from your Social Security payment before it ever hits your bank account. So when Medicare costs go up, your take-home Social Security goes down even if your benefit technically increased. In 2026, Medicare Part B premiums have been adjusted, and for many beneficiaries, the amount being deducted from their Social Security is higher than it was last year. The COLA, the cost of living adjustment, that was applied to Social Security at the start of 2026 was meant to help people keep up with inflation. But for some recipients, particularly those in certain income brackets, the increase in Medicare premiums is eating into or even completely canceling out that COLA increase. And starting May 1st, some mid-year premium adjustments tied to income verification are going into effect, which means your net Social Security deposit could change even if you haven't changed anything in your life. Here's what a lot of people don't realize. There's actually a protection called the Hold Harmless provision that's supposed to prevent your net Social Security check from going down because of Medicare premium increases. But this protection doesn't apply to everyone. If you're new to Medicare, if you pay your premiums directly instead of through Social Security, or if you're in a higher income bracket, you may not be protected. And that means May 1st could bring a real visible reduction in your monthly deposit. So what should you do? Let me walk you through this practically. First, if you haven't already, log into your My Social Security account at ssa.gov. This is your personal dashboard where you can see your current benefit amount, any pending changes, any overpayment notices, and your Medicare premium deduction. If you've never set up an account, do it this week. It takes about 10 minutes and it gives you complete visibility into what's happening with your money. Second, if you received any letter from the SSA in the last 60 days, anything at all, read it carefully. Don't set it aside thinking it's just routine. Letters about overpayments, eligibility reviews, or benefit adjustments often have deadlines, and missing those deadlines can make your situation much harder to resolve. Third, if you're a public sector worker or retiree who was affected by the old windfall elimination provision or government pension offset rules, call the SSA directly and ask about your status under the Social Security Fairness Act. Ask specifically whether your benefit has been recalculated and whether you have any back pay coming. Don't wait for them to come to you. The system is processing millions of cases, and you want to make sure yours isn't lost in the backlog. Fourth, If you're on SSI or you think you might qualify for SSI, find out about the new asset recalculation rules before May 1st. You may have more options than you think. And finally, I have to say this because it comes up every single time there's a major Social Security update. Please be aware of scammers. Every time news like this spreads, criminals use it as an opportunity to call people, email people, text people, pretending to be from the Social Security Administration. They'll say your benefits are suspended, or there's been suspicious activity, or you need to verify your information to continue receiving payments. The real Social Security Administration will never call you and ask for your Social Security number over the phone. They will never ask for gift cards or wire transfers. They will never threaten you with arrest. If you get a call like that, hang up. Then report it to the SSA's Office of Inspector General at oig.ssa.gov. Let's take a step back for a second and look at the bigger picture here, because I think it's important. What's happening in 2026 with Social Security is part of a broader conversation that this country is going to have very seriously over the next decade. The Social Security Trust Fund, the reserve that backs up the program, is under long-term financial pressure. Projections from the Social Security trustees have consistently shown that without some kind of legislative action, there could be a reduction in benefits across the board sometime in the 2030s. That doesn't mean Social Security is going away. It doesn't mean it's going bankrupt in the way a company goes bankrupt, but it does mean that the pressure on this system is real, and the changes we're seeing right now in 2026, some of them generous, some of them painful, are part of an ongoing effort to manage that pressure. And the people caught in the middle of all this, the people who are navigating these changes with fixed incomes and rising costs and a healthcare system that keeps getting more expensive, those are real people. People who worked for 40 years and paid into this system their whole lives and just want to be able to live with dignity. That's who this matters to. And that's why this conversation is so important. Look, I know this has been a lot of information. I tried to cover each of the 4 changes as clearly as I could: the overpayment recovery rules, the Social Security Fairness Act payments, the SSI asset changes, and the Medicare premium adjustments. Each of those things is happening right now, and May 1st is the date when several of them land at once. The more you know, the better prepared you are. And the better prepared you are, the less likely you are to be caught off guard. So here's my ask. Log into your account at ssa.gov this week. Read any letters you've received from SSA in the last 2 months. Call them if you have questions. Yes, the hold times can be long, but it's worth it. And share this video with someone who needs to hear it: a parent, a grandparent, a friend who's on Social Security or getting close to it. Because information like this doesn't reach everyone. And too many people find out about these changes after they've already lost money they didn't have to lose. Don't leave money on the table. Don't let paperwork pile up. Don't ignore letters from the government. Stay informed, stay proactive, check your account, and please take care of yourself and the people around you. You've worked hard for every penny of this. Make sure you're getting what you've earned.